Holy smokes, it's Cyber Monday and BlockFi just filed for Chapter 11 bankruptcy. In this video, you're going to see how much cash they actually have on hand, why they suggest that they're going bankrupt, and oh my lordy, the insanity of a lesson that is not your keys, not your crypto. Something we've been talking about for years on this channel, but boy, this really puts the nail in the coffin of trying to farm yields on exchanges. And it comes after the FTX collapse. Let's talk about it by starting with some of these tweets. But first, today in honor of Cyber Monday, yes, we have a Cyber Monday coupon code that is exclusive for this holiday. Make sure you take advantage of that coupon code. Join the lifetime access to the programs on building your wealth, especially with the Elite Hustlers course now live and new lectures coming to the Stocks and Psychology of Money and real estate investing courses totally for free soon. Stay tuned here in December. Well, December's in a few days, so in December for those new lectures to drop and the next batch of the Elite Hustlers lectures to come out. I'm very, very excited. Okay, take a look at this. BlockFi, 11 hours ago. Withdrawals will remain fully operational. This was on November 10th at 5:37 p.m. So 11 hours ago, BlockFi, withdrawals will remain fully operational. BlockFi 20 minutes ago, pausing withdrawals, can't do business again anymore. It's like, you can't trust what these companies are saying. This is why for a week to 2 weeks prior to BlockFi going bankrupt, I've been screaming on the channel and on Twitter, get off the exchanges. Hopefully you were able to heed that advice. And because the same thing is what happened at FTX. That's why I wrote, this is why trusting institutions is tough. Sam Bankman-Fried says everything's fine, and then now all of a sudden they're going bankrupt. And what was really frustrating is they actually froze with withdrawals, but then they sent out an email saying, dear valued cardholder, because I actually had a BlockFi credit card, except it was zero balance. In light of the recent developments with BlockFi, we'd like to provide a friendly reminder that all terms and conditions of your cardholder agreement continue to apply. In other words, you need to continue making payments to your credit card, otherwise they'll report you to the credit bureaus. They literally threaten you here. Your repayment activity and account status will continue to be reported to the credit bureaus. So in other words, if you don't pay your bill, even though we're going, basically bankrupt here and freezing withdrawals, you have to keep paying your bill, which was crazy. And now, folks, it is official. Today is November 28th, it's Cyber Monday, and BlockFi has filed for Chapter 11 bankruptcy protection, which is usually a way the company says, hey, we want to reorganize, we're not going to liquidate, we want to reorganize, but we are going bankrupt, and because we're going bankrupt, we probably are going to be in a situation where shareholders, like equity investors, get wiped out, but maybe our company gets bought out or merged for some form of a discount with another company, and that company might say, hey, look, we'll take all your accounts and all your users, but we'll only pay you 10 cents on the dollar for everything that's there. And it sucks because exchanges like this don't usually have what's known as SIPC insurance. So now, if let's say you're investing in stocks through TD Ameritrade as an example, they usually have a protection of loss of $500,000 per account. Now, verifying the terms and conditions, obviously, on all the trading websites that you use. But that means if the company goes bankrupt and you have more than $500,000 invested through their platform, at least you have some way of getting up to $500K back. But with these crypto companies, they don't have SIPC insurance because obviously crypto hasn't matured to that level of regulation and protection yet. This disaster will hopefully lead to those sorts of protections. But this is wild. Look at what this statement says here. It says that BlockFi has $256 million of cash on hand, which they say is sufficient liquidity for operating expenses. But this is the scary part, all right? Watch this. We're gonna go jump on over to the actual bankruptcy filing. Remember, they've got $250,000 available, $256 million, kind of like an old crappy 256K modem, okay? They got is that right? $256 million on hand. But look at this, okay? Current liabilities are estimated to be $1 billion to $10 billion. Now, they do say they think they have assets in around that range, but assets could be illiquid or they could be worthless, once you actually mark them to market. So I think really all you can expect that they have is $256 million, but they have liabilities in excess of $1 billion up to $10 billion. And I hate to say this, But look at this, folks. When you look at the attachments, the people getting rich here are the attorneys. Look at this one attorney right here. Had a retainer. They've already been paid $1.9 million. And now they have a retainer of $750,000. And here's another attorney. Prior to this filing, I have received $1.47 million with a retainer of $2 million. And then it's actually those two law firms here. But this process just gets started. A retainer doesn't mean that's all of the money, right? Or all of the charges that are going to happen. I think that $256 million gets whittled away on corporate salaries and attorneys as they go through a bankruptcy proceeding, which could take anywhere from 6 months to 2 years. And they just whittle away that $256 mil to where there's probably very, very little cash left over actually at the end. Now, what reason do they give for this collapse? Well, they gave us a little FAQ section, which doesn't make any of this any better. So this is a Chapter 11 filing with the District of the Bankruptcy Court for the District of New Jersey. They are trying to maximize value for all stakeholders. They think they'll have over 100,000 creditors. And they say here, does BlockFi hold 100% of client deposits on FTX? They say that the rumor that a majority of BlockFi assets are held on FTX are false. Okay, well it's important to know that even though the majority might not be there, it's possible that with the way they've written this, up to 49% of assets that BlockFi has could actually be held on FTX. However, as shared, we do have significant exposure to FTX and the associated corporate entities that encompass obligations owed to us by Alameda. In other words, Alameda, Sam Bankman-Fried's company, his investment company, owes money to BlockFi. And they do hold assets at FTX.com, and they have a credit line with FTX.US, but they don't have access to that credit line anymore. In other words, now they have no credit line, and potentially up to 49% of their assets are gone thanks to FTX. And Alameda owes them a bunch of money. And even though that loan is considered an asset, going back to sort of that asset argument, right? Alameda's loan to BlockFi could be, the other way around. BlockFi's loan to Alameda could be a $2 billion loan. BlockFi may have said, hey, we're going to give you $2 billion, Alameda, because you're promising to pay us 10% because y'all are a fraud. And we're going to go pay our customers 7% on their BlockFi deposits, right? That's just an example. And then BlockFi pockets the difference. BlockFi has that massive exposure to Alameda. And now technically, if the number is $2 billion to Alameda, let's say, technically that is an asset. So when you look over here and you're like, well, wait a minute, Kevin, on the liabilities and assets section, it says that they have assets of $1 to $10 billion. Yes, but again, that estimated asset that Alameda owes BlockFi money could be worth zero. Could be worth $0. That's why you could really only go with the cash they have, in my opinion, $256 million. But the problem is that'll get whittled away. So they say here, we're shocked by the news regarding FTX and Alameda. We, like the rest of the world, found out about the situation through Twitter. Couldn't even get a text message from Sam Bankman-Fried. What does this mean for clients? They say here, acting in the best interest of our clients is our top priority and continues to guide our path forward. We will communicate with our clients through the process to ensure they hear from us directly. We are not requesting authority to restore platform activity at this time. In other words, if you have money on BlockFi, it's stuck on there for a while, and it's basically subject to the Chapter 11 process. They encourage you to maintain your BlockFi app and account at this time, and withdrawals from BlockFi continue to be paused. So, can't get your money out. If you have auto deposit, stop putting your money in. I definitely recommend not put your money in anymore. In fact, I mentioned before, BlockFi and FTX collapsed multiple times. Make sure to get off exchanges. I even closed my BlockFi credit card about a month ago, and these are things we've talked about not only on Twitter but on YouTube, about getting off exchanges. Well, actually, we've been talking about that for years, but I'm so devastated by this. This is so terrible. But anyway, let's see what else we have here. At this time, withdrawals continue to be paused. When will BlockFi complete the restructuring process? Promptly as possible. The ultimate timing may vary. I would say 6 months to 2 years. How do you keep informed? They've got a link to the attorney's website where you can get the filings. What does this mean for retail loans? So this is potentially a good thing right here. At this time, you can see this here at the bottom. At this time, clients do not have the ability to post new funds at BlockFi. As a result, we have put your loan into forbearance. Finally, so even though they sent out that email about credit cards and loans, it looks like everything's in forbearance. Any amounts due, including interest and maturity payments, are placed on hold until further notice. The interest rate on your loan will be set to 0 from November 11th, 2022 onwards, and clients will not be charged additional interest or when a loan enters delinquency after November 11th. Your loan will not be reported as delinquent to credit bureaus. You will not be expected to make payments at maturity while your loan is on hold, and there will be no late fees associated. Should you have questions, hit us up at blockfi.com/contact. What if my retail loan is showing as delinquent? For US-based customers, loan servicing provider Scratch will show your loan as delinquent in their system, but given the 0% interest, your loan will not accrue any interest or late penalties. Your loan will not be reported as delinquent to credit bureaus. Is BlockFi liquidating retail loans if the loan reaches a liquidation or loan to value? If the loan reaches liquidation loan to value while platform activities are paused. In other words, are you going to get margin called if Bitcoin continues to fall? At this time, clients do not have the ability to post new funds to BlockFi. As a result, no. Basically, they're pausing margin call requirements. Now, BlockFi's, or I should say Bitcoin is actually relatively stable after this, mostly because this BlockFi bankruptcy was anticipated. We saw the writing on the wall for this. We just now finally have some of the details of it. And that cash on hand is pretty dang disgustingly low. So, pretty terrible situation. This sucks. Huge lesson in staying away from companies that are not SIPC insured. And not your keys, not your crypto. Happy Cyber Monday, everyone. Thanks so much for watching, and we'll see you in the next one. Goodbye.